Meet The Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
Plausible deniability, just in case they discredit everything I say up here. I heard all the applause for Andreas. It was a great speech. I'm basically going to say the exact opposite of what he just said, so in case you guys really, really love Andreas, I think this will be an interesting talk. But no, I think that was quite a challenge to follow him. He's a dynamic speaker. I myself am not a dynamic speaker, and I'm also going to talk about some things which I think are a little bit drier, but he set that challenge offered, challenge not accepted because I'm not a great speaker. I also, so I thought there was going to be a nice lectern up here so I could, be like a professor and speak. I have an artificial hip on this side, so I didn't want to trip as I came up on the stage. A lot of things that can go wrong up here. Hopefully, you guys can bear with me. Jet lag, just got in yesterday from New York. The Crypto Compare guys took me out last night drinking, so I'm really tired. Multiple allergies here. Something in the London air is really getting to me. I'm having a hard time, breathe. So anyway, pick your excuse. Bear with me as I kind of go through this. With that, good afternoon. My name is Art Claybon. I'm actually a venture lead in a corporate venturing group called the EY Foundry at Ernst & Young, one of the big 4 tax and accounting companies. Like I said, we're a corporate venturing group tasked with creating and commercializing new businesses and services for EY. We're actually global. We operate across the service lines of EY, although we're nominally kind of aligned with EY's $10 billion tax practice. Within the Foundry, I'm actually responsible for a product called EY CAT, and CAT stands for Crypto Asset Accounting and Tax. This is the application that the firm uses to do accounting and tax, and do the tax calculations for our clients who have crypto assets on their balance sheet. But I promise you today, I won't spend the next 15 minutes talking about tax. Unless you want me to, if you guys, show of hands, want me to talk about crypto asset tax, I can go deep into some of the concepts. I doubt that's what you want, so I probably won't go there until the very end where, most of this talk peters off, so it won't matter. A little bit about my background. I'm actually not an accountant or a CPA or a tax person. I'm actually that person that Andreas was mentioning that you hate. I'm a hardware designer by trade. I designed computer chips for spy satellites for the first third of my career, maybe, which was really, really interesting. Sure, I am with some abuses, but for the most part, I think that was kind of altruistic, good parts of what we do. But of course, I can't tell you about any part of that because it is mostly classified. But on behalf of all, I think, hardware engineers, hardware designers, people who actually deal with tangible types of products, I think I want to first start by expressing my supreme disappointment in every one of you out there. I think shame on all of you, shame on me, shame on all of us. That said, I'm still pretty bullish on this whole kind of industry. But I think the topic of my presentation, my talk today, is kind of interesting. Beyond the Wild Wild West, the case for self-regulation. And I was told by a colleague of mine that maybe some younger folks and maybe non-Americans may not be familiar with the concept of the Wild Wild West, which was shocking to me since I grew up with John Wayne and all these things. But I think just to level set, the Wild Wild West was a time in America's kind of colonial history where the practicalities of law and order sort of took a back seat to the excitement and all of the benefits of building a great nation. So I kind of look at crypto, and you guys have probably heard some of the same stories. There's a scam here, there's a hack there. Stable coins are actually not really tethered to anything they're supposed to be tethered to. I look at all that, and I was like, yeah, that kind of fits, right? It's the Wild Wild West out there, and I think from my perspective, it kind of proves the kind of the maxim from time immortal, and excuse my French, that it's pretty easy to separate a fool from his money. So, I mean, that's kind of the whole thing, I think, around, I think, why we actually do want some sort of regulation in this market. However you can bring it. I'll start with a quote. It's a quote from, and it's a longish quote, so bear with me. It's from the SEC commissioner, that's the US Securities and Exchange Commission, regarding the need for quote-unquote self-regulation. I was actually going to do it in the voice of what I thought a SEC commissioner might sound like, but looking at this crowd, I might actually skip that right now. So Do you want me to do it? I won't do it. I think I might trip myself up. But I'll start. It's a longish quote, so just bear with me. So, in addressing the convention last year, I urged at some length the importance to investors and the national economy of the creation of an axis of active cooperation between those engaged in business and those charged with its regulation. An axis of active cooperation. I attempted to point out the clear interest of the investment bankers, dealers, and brokers of the country and of the SEC in developing a plan for coordinated action which would have as its two principal objectives the enforcement of law with a minimum interference with the normal processes of business and the establishment and maintenance of high professional standards of conduct and competence. So a plan for coordinated action. It is now very generally understood that as a matter of practical business operation, as well as of realistic governmental administration, such cooperation is well nigh indispensable if we are both promptly and effectively to unite the technical skill and experience of the industry with the strength and prestige of government for the elimination of both illegal and unprofessional practices injurious alike to investors, the vast majority of brokers and dealers, and the public generally. I know it's a long quote. Good stuff, though, but okay, 100 quid to anyone who can tell me who that quote is from. Actually, it's not a real bet. I'm not allowed to do that as a member of EY, but I always wanted to say quid on stage. People don't know that Americans don't usually get to say the word quid. It's a great word. And also, it's a trick question because the quote is not from the present commissioner of the SEC. It's actually a quote from the Honorable George C. Matthews, the commissioner of the SEC in 1938. He's talking about cooperating with industry players, even back in 1938, because the government really couldn't regulate the securities industry in the US. And the subject of that so-called talk was the Maloney Act. For those of you who are not familiar with the US securities industry, the Maloney Act is still in force today, and it's the official policy of the US government that actually allows the US securities industry to regulate itself. Did you guys know that the US securities industry was self-regulated? Probably not. Those of you who are actually in the industry, you probably know that. But not many people outside, I think, that industry recognize that. The organization that actually creates the rules and sets the rules is an organization called FINRA, with the ability to regulate its members, actually impose fines with the force of law. So why did the SEC, in their brilliance, kind of go to this sort of extreme measure? It's because they couldn't keep up with the pace of technology. And that was back in 1938. So back to crypto. Wow, my time is really running out. I started with that example kind of in the crypto asset industry, not saying that maybe we should lobby us as members of the crypto industry to lobby government to allow ourselves to self-regulate, although from my perspective, that's not sort of out of the question. Really, I think my whole point is we need to recognize for ourselves within this industry, just like Mr. Matthews, is that the crypto asset industry is not going to be regulated by authorities on their own. It's just not. It's a problem because the pace of innovation has kind of outpaced the ability for regulators to kind of regulate. And it's not new or unique. I just read a quote from 1938 just talking about that very subject, right? And it actually has a term for it. It's called the pacing problem. It's been happening for a very long time. In 1938, it was the secondaries market. The whole reason for the Maloney Act was so that the SEC thought that when a company went IPO, that you would have your stock certificate, you put it on your chest, and you take it to the grave with you. They didn't know that when people got stock certificates, they would trade on these secondary markets over the phone, and the assets would be transferred post that IPO. But this happens in multiple industries. I mean, crypto, at-home genetic tests, personal drones, driverless cars, lab-grown meats. I mean, what are they actually doing with those things, right? 3D printed prosthetic limbs. These are all actually new innovations from the last 5 years that really, really need some sort of intelligent regulation, but really don't have it. And so I think from the absence of having intelligent regulation, what you'll see is the government, and they're striving to actually protect the public. They usually resort to the regulation of last resort, which is just to say no. You can't do it. Don't try it. But the problem is, which is what Andreas was saying, is because technical innovation runs so fast, by the time regulators actually get around to imposing regulation, most of us can kind of go around it, go underneath it, go above it. Technology can really make a lot of regulation that took years to develop, can really make it moot. And so I think that's kind of where we are right now. To solve the pacing problem, what you're really thinking about are things that evolve, I would say, a little bit organically in past markets. Some of these soft law mechanisms where government would kind of adopt industry best practices and codify it into law. Government would reach out to industry to try to figure out what they should do to try to regulate themselves. And that kind of happens, I would say, organically. It's not planned or it's not something that they really anticipated or trying to do. But, I mean, if a lot of this actually sounds controversial, let me go ahead and define what I mean by self-regulation. What I'm really talking about is the industry explicitly defining the rules for itself and actually working with regulators to act in IATF, World Wide Web Consortium. The internet, in a lot of ways, is very similar to blockchain in that it's distributed, it's global, decentralized. There's no one set of policies or operating principles. There's no one body that can regulate the internet, right? You have all of these other non-governmental associations that have come together to make the internet what it is, right? But I think if you look at the internet, if either one of these organizations were to cease to exist, the whole backbone of the internet, which is, by the way, the backbone of $1 trillion dollars in industry, and also the backbone of many governments, would fall like a house of cards in like a single day. And those are organizations that are all self-regulatory in nature, that all actually sprung up organically with no plan, but it is purely a self-regulated market. So, and I also say, if we're actually just kind of emerging from this crypto asset, cryptocurrency winter, which I've been told was the result of, and maybe you've been told this also, was partly a result of the lack of regulation. But I say to you right now, if you're actually waiting for the SEC or your respective government's industry to actually regulate cryptocurrency, you're going to be waiting for a very, very long time. They're going to come up with regulation 10 years from now, and it'll be, like I said, it'll be moot by the time you get around to actually imposing it, right? And also, this was last week, the US SEC chairman, the current chairman, Jay Clayton, he said as much when he explicitly said, the SEC won't just flip a switch on crypto. He's saying it's going to be a while. They're going to take it slow. For now, they're just going to say no to whatever you come up with. But I don't think the industry really needs to just sit around, right? We're at this point where we're moving faster than what the internet ever actually moved. The internet was invented a long time ago. I think from when I was in college, I won't tell you the year, the internet had already been around for 10 years, and we were still using web browsers that were all text-based. But like I said, it's been around for a long time. Now you have crypto that came along, and it's global in a very, very compressed period of time. But we're at that period of time in our industry's evolution where we don't really have to sit around. We actually can help define the rules of the game for our regulators who really don't have a clue as to how to actually do that. The folks who are going to come on the stage after me might disagree, by the way. So how do we do this? I haven't thought that all the way through. I'm looking at my timer. It says, you better get off the stage in like 3 minutes. But I do have a few, I think, suggestions for how we might accomplish that. And I think it has first to do with recognizing what the goals are and agreeing on the goals, not just amongst ourselves, but also amongst our governments and regulators. So I can think of 2 primary goals. The first one is I think we all can agree we want to grow this market. It's a technology, it's interesting, it's big, it's like the internet. Why wouldn't you want to grow it and make it more ubiquitous and for all people? And I think even Andreas can agree with that. The second goal is we really do want to protect ourselves, and we want to allow governments to help protect us from that old maxim I mentioned, that a fool is pretty easily separated from their money. So I think the second one for government is pretty easy. They can agree with you all day that they really want to protect the public. And in fact, a lot of, if you think about what government really is supposed to be doing, they're supposed to be protecting the public, right? That's one of their main, points. The second one actually is the first one actually is a little bit more nuanced. But then that actually gets me back to tax, which I knew I'd be able to bring back somewhere in this talk. In the US, in 2017, the US government said that for the US folks who trade crypto assets, about $12 billion of tax wasn't actually paid, that was owed. And so that's actually a huge number, a huge loss in tax base even for the US government. I guess, not surprisingly, every government, just by their very nature, has a keen interest in growing their tax base. So if you approach the crypto industry from that perspective, and as a regulator, I think they would actually agree with you with that goal also. They really do want to grow their tax base, meaning they actually want to grow the market. All right. So step 2, and here's where a lot of the controversial part comes in. So I'll go through it pretty quickly so I don't get any apples or booze or anything. Transact on the blockchain. It looks a whole lot like broker-dealer relationships. Why don't we have broker-dealer associations, reputable, responsible broker-dealer associations amongst ourselves? Even though I know a lot of folks don't like other folks in their industry. I mean, some of you guys I see out there, I don't like you. I know you and don't like you. But I think that's part of what you actually have to do. And what that will allow you to do is to kind of come together and have a meeting of the minds. A meeting of the minds and I think a way for you to actually establish kind of a common set of rules and laws, not laws, but rules and regulations for your own industry, for your own folks, that you can follow and that you can enforce those rules on your own membership. I mean, we know a lot better than any regulator what's actually good for our industry and how to protect people within and protect our customers from any of the pitfalls that can befall them, right? So I think I might even go a little bit further on the guidelines for intelligent self-regulation. A couple of common sense guidelines. One which I'll say quickly is know your customer is actually a necessity, not meaning that you have to give that information to every government, every Tom, Dick, and government that comes to you and says, hey, give me all of your information. But you as a business, you kind of need to know who your customer is because that's the basic level, the basic translation between you and a regulator, being able to say, I actually know who's transacting within my own company. Anonymity as a company aspiration probably is a little bit misguided. My second suggestion is don't develop these things, don't develop rules in a vacuum and not really apply them to yourself, right? You have to follow the rules that you set for your industry. There has to be consequences for not following rules. Make sure you actually go say what you want to happen and also do what you want to happen. And finally, I think for us, if we have trouble actually getting on regulators' radar, I think one of the tools most of us can actually use is a tool of self-reporting. You have the ability to control what you report to governments. Right now, they're not asking, even though we say there's lots of different conflicts out there in terms of what governments ask for, they're not really asking for that much. You have the ability to control what you over-report. There is no penalty for over-reporting. You can set that standard of what you actually want to report to a regulator. They're going to accept it. They're probably going to say thank you, and from my perspective, that starts with tax. Help your regulators get whatever tax they think they're due from your customers. And I know it's a little bit biased because I am from a tax organization, so that's a shameless plug there. With that, I want to thank you guys for your time today. If you're interested in hearing more about our ideas, the EY Foundry actually builds back-end tools to plug into infrastructure, your applications, so that you actually can kind of react to the day-to-day hourly whims of regulators and also, your industry to follow kind of the rules of the game. So feel free to contact me after the convention talk. With that, thank you guys and good luck with your innovation endeavors. Thank you.